Alrighty, guys. So we had a pretty nice green day today in the stock market. We had the S&P 500 up around 0.5%. Looks like the Dow went up about zero point 0.2, Nasdaq up 0.7. Same with the Russell, and we had the VIX up as well, about 0.3%. And it looks like the metals also went up. Looks like gold hit another all-time high, up 0.7%, as we had silver up 1.7%. So we're going to break down the indexes today, like always. You guys know the drill. And we're going to go over 5 companies that all reported earnings today. So hit the like button, make sure to subscribe, and you might as well follow me on X and on TikTok. Those are linked down below, guys. And with that being said, cheers. Let's dive right into the video. And dang, this thing is freaking heavy, guys. My wife got me what is this? A Stanley, right? So I never had a Stanley before, but hey, she got me one. It's like 42 ounces of water, so this thing's massive, and it's filled to the brim right now. So let me put that over here so we don't hurt anybody today, and let's dive into it, guys. So again, green day across the board. S&P, Dow, Nasdaq, Russell, and a bunch of stocks did very well today, like CrowdStrike, Coinbase, Palantir, which we covered earlier today. Companies like Warner Brothers, Discovery, Nvidia. What else do you know? Nvidia went up over 3%. So it doesn't look like we hit another all-time high today on SPY, although it does look like we are continuing to rebound off of this 180 SMA, which is at about $500. And now we're back over the 50 SMA, which is a good sign overall for the bulls, considering yesterday, we sold off a good chunk here. So that's a good sign there on SPY. And on Triple Q, if I pull this up, guys, it looks like we're bouncing off the 180 SMA on the 4-hour chart as well. We broke over the 50 SMA too, which is awesome. Can't complain there. So let's talk about these stocks. What happened today, guys, with some of these names? So JD.com, I'm not sure if you saw, but this thing went up over 16% on the day. It closed at what, almost $25 per share, and yesterday it was at what, $21. And yeah, at one point it was up over 25, almost at $26 per share. So we got earnings out of JD. So at one point it was up, let's see, around 20%. So we got earnings out of JD, and it looks like they did 75 cents of adjusted EPS, which beat the 63 cents expected, and they also beat on sales, 43.1 billion versus 42.16 billion. Pretty good. And the company here looks like the board approved annual cash dividend of 38 cents a share. Not bad. Anything here on guidance? Not seeing anything here on guidance, but yeah, they double beat. There's got to be more to it, obviously, guys, that we're not just seeing here on the live news tab. For the stock to go up 20%, it can't just be on a double beat. But yeah, looks like they're again approving a dividend. Looks like they're doing share repurchases up to $3 billion through March 2027. So keep your eyes on the momentum here, which, I mean, guys, look, it is still very beaten down. Even though JD went up over 16% on the day, it is still very beaten down. And it's just now breaking above the moving averages on the 4-hour chart for the first time in months. It's been a while. So let's see if this earnings report was enough or is enough to, get JD even higher from here. So keep your eyes on that. Foot Locker as well. Might as well watch Foot Locker. This company just reported, and my goodness, guys, yeah, this is not looking good. Down 30% on the day, down over $10 per share, which, I mean, this happened not the last time they reported, but the time before that. I mean, we saw a similar drop. This was back in the summer, right? Yeah. Foot Locker was at about $25. They reported, then boom, they got down to $15. So we saw a similar drop today, guys. We hit a high of $37, and we got all the way down to $23. Oof, man, that's rough. Almost 40% of a drop there. So Foot Locker, let's see, man. Let's see what they did. Adjusted EPS of 38 cents, which beat the 32 cents expected. Sales also beat 2.38 billion versus 2.227 or 2.27 rather, excuse me. And it looks like here Foot Locker sees full year 24 adjusted EPS of $1.50 to $1.70 versus $1.93 expected. There we go. Guidance is way under that, or way above what they're expecting. So that's not good. Comparable sales up 1 to 3%. All right, looks like anything else here? Wedbush cut their price target to 25 from 30, maintaining neutral rating. So really, guys, it's because of that guidance, right? Sure, they beat in the last quarter, which is great, but that doesn't really matter. Stocks are forward-looking vehicles. Yes, it does matter to an extent, but at the end of the day, stocks are forward-looking. So if we see, all right, they see, the full year 24 adjusted earnings less than the expectations, if that's, what we're getting, which in this case it is, the stock's not going to like it in the short term. And again, we're noticing this cliff diving right now, completely free falling under the 180 SMA, 50 SMA on the 4-hour chart. So let's see, will this rebound? Time will tell. I'm not looking to buy it personally, full disclosure, so keep that in mind, guys. But either way, I'm watching it. Ticker symbol FL. And we also got earnings, I believe, out of EVGO. Let me pull these earnings up and see. This is now, a $3 stock. At one point it was well above 30, right? Or maybe not 30, but it was in the 20s to 30s at one point. Yeah, $25 back in 2021. And again, now it's at $3 per share, but it did go up over 8% on the day. And we do have an inverse head and shoulders, clear as day, in the making here on the 4-hour chart. You guys see that? We have the left shoulder. We got the head right here. Boom. Got the right shoulder. You guys see that? So, yeah, not looking too bad for the bulls. Maybe more upside there. But EVGO looks like they did EPS of negative 12 cents, which beat the negative 19 cents expected. And sales also beat 49.9 million versus 44 million expected. All right, not bad. About a $6 million beat there for sales. So that's pretty good. Looks like they see full year 24 revenue of 220 to 270 million versus 260. All right, pretty good. There for full year revenue guidance, and they ended 2023 with 3,500 stalls in operation or under construction. All right, pretty good. So yeah, I'm looking at this as a trade, obviously, as I'm looking at all these stocks as trades. I wouldn't want to invest, at least personally, in some of these names right now, or any of them, to be honest. But yeah, as a trade, EVGO, not looking too bad. Again, we got that inverse head and shoulders. We're starting to break out, so keep your eyes on it. I'm watching it as well. The next one here, guys, is CPB, which is Campbell Soup. So let me see what's going on with them. They reported earnings, and it looks like their stock went up 0.8% on the day. So let's see what they did. So it looks like they did adjusted EPS of 80 cents, which beat the 77 cents expected, and they also beat on sales 2.46 versus $2.44 billion expected. And let's see, they backed their full year 24 adjusted EPS of 309 to 315, and they affirmed their sales guidance of 9.31 and 9.5 billion versus the 9.37 billion expected. So that's pretty good there. But clearly on the chart, guys, we've been struggling in this range on Campbell Soup. I'm not sure why. We can see if I draw it out, it's been between $45 as resistance with with support at around $42. So really, this just has to break above that $45 mark. So let me just set my alert there now. I'll do that. Mark is at or above $45. If that point does break, the way I'm looking at it is, all right, maybe we start going $47. That could be the next gap in the very short term. Then from there, we could be going up even more, in my opinion. So keep your eyes on CPB. And the last one for the video, folks, is Thor Industries, ticker symbol THO, which, man, talk about a gap down in this one as well. Down 15% on the day after they reported, let's see, EPS of 13 cents, which missed wildly the 67 cents expected, and sales also missed 2.21 billion versus the 2.27 billion expected. So double miss for Thor Industries. They cut their revenue outlook from 10.5 to 11 billion to now 10 to 10.5 billion versus the 10.65 billion. So they missed both EPS revenue. Their guidance is trash. So yeah, that's why they're gapping down, guys. And all right, the stock's still up. You guys got to realize we can't, dog on them too much because the stock's still up. But geez, 15% drop in a day. That's pretty big time. But we're still up off the lows from $85 to now 107. 28%. We're still up 28% off the lows from the end of October. So what do you guys think? Let me know your thoughts in the comments about these stocks here: JD, Foot Locker, EVGO, CPB, and THO. Let me know your thoughts in the comments. Hit that like button. Don't forget to subscribe and get your free stocks from Moomoo, up to 15 stocks, each up to $2,000. Use that link down below. Open up your account and fund it with at least $100. You get 5 stocks, and fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks, each up to $2,000. So get on it, guys. Use that link down below. And with that being said, cheers. I'll catch you all later.